Hello everyone, and welcome to your Daily 5 for April 11th, 2024. I'm Joe Duarte from Joe Duarte and the moneyoptions.com, author of the best-selling Options Trading for Dummies, the Everything Investing in Your 20s and 30s. If you like what you see here, please consider a free 2-week trial to my service and stay tuned at the end as I have some new information to reveal which may be useful to you. Today I want to talk about how the smart money finds big winners by spotting a pending short squeeze. So our goal is to recognize the telltale trading pattern setup of stocks which are pending a short squeeze before the crowd. Step one, of course, is to define a short squeeze, which is an increase in a security's price when short sellers are forced to buy back shares. When that happens, of course, price goes up. Step two, we want to look for the short squeeze opportunities in those oversold sectors. Of course, step three is to pinpoint the pending short squeeze setup. And that's what this video is all about. So first, we're going to talk about our tools and stock charts, and we want to be able to screen for oversold sectors. And then we want to be able to pinpoint those indicators that will help us to spot the short squeeze. And of course, these are the accumulation distribution line, which helps us spot what the short sellers are doing. The unbalanced volume line, which tells us about what investors, those real buyers and sellers, are doing. And those volume by price bars, which tell us that support, resistance, and what the algorithms are doing. And of course, that helps us to pinpoint the entry point for the short squeeze. So what we want to do is start with our screening tool. And of course, one of my favorites is the preset 3010 S&P Select Sector ETFs, which you can find on Stockcharts.com under charts and tools, and then you go through your chart list and set, this is a preset, so you don't have to do anything. So really a quick look here, what we want to do. If you look at a couple of sectors in this preset, you see that the utilities are in a downtrend, but starting to form a base, and so that might be an area where you look to see if there's a short squeeze setting up. And of course, we look down here at the artificial intelligence in the BOTZ or BOTS ETF, and you can see that this one's not quite forming a base, so you want to keep that on your radar screen, but you want to be able to focus more on something like the XLU or the utilities. And of course, these are just examples, and as I go through this video, I'll give you a little bit more detail, but this is how you screen. So let's get to those indicators. First one is the accumulation distribution line, and this tells us about what the short sellers are doing. And of course, this is a money flow indicator. And what we want to do here is focus on where the underlying stock, which in this case is a sample chart from our chart school of RIM, Research in Motion. And what we want to do is see where the closing price for the day is. Now, if the closing price for the day is in the middle of the trading range, then we're going to see that that line essentially moves sideways. And that tells us that short sellers are not particularly active at this point. And what you can see here is that short sellers are very active as the line heads down because the closing price is near the low of the day, and short sellers love to pile on. Now, we move here to the middle bar here. We see that the accumulation distribution line is rising, and that's because the closing price for the stock on the day was toward the end of the trading range. That's a sign of short covering because short sellers don't want to be in anything that's closing near the top of the trading range of the day. That's just bad for business. Over here, we see that the situation is reversed from this bar, and that we see that the stock has closed at the low of the days, and that tells us that short sellers are piling on, and sure as heck, we see that the ADI line is falling down. So the concept here is that when stocks close at the top of the trading range for the day, you want to verify that the AD line is moving up, and that tells you that short sellers are not active. By the same token, you can see that here it started, the AD line started moving lower, and we want to check and see where the stock is closing, and sure as heck, it's closing down toward the end of the trading day, and that tells us that short sellers are active. And here's the confirmation. And so we see that the ADI line is heading down, and the short sellers are very active. Now we want to know what those investors are doing, and so we look at this old chart from Chart School from Walmart, and we see that this is on balance volume. Now, on balance volume is again a money flow indicator, but the key here is that you want to see that the stock closes above the closing price for the prior day, and you want to see that that volume is rising. When these two things happen simultaneously, what you see is that the on balance volume line rises, and that tells us that buyers are active and that money is coming in. Now, by the same token, you want to be very thorough about what you're doing and see that this one, the accumulation distribution line, if it was present in this chart, would be very bearish. But what we see here is that on balance volume is actually rising because the price of the closing price on this day is above the closing price of the prior day, and we see this big green bar here. So this is telling us that maybe there's some dip buying here, and that perhaps we're getting close to a short squeeze. We want to watch this very closely for the next few days, and sure enough, what you see is that the unbalanced volume line is actually starting to bottom out because you get higher closes on several consecutive days. And so by the end of this sequence, what we see is that the more higher closes compared to that of the prior day, and the more green bars and upper volume and rising volume develops. And so the on-balance volume line starts moving up, and that tells you that people are actually buying that dip and getting into the stock. So here's a comparison of both of them, and we want to focus on a couple of things here. The black line is the on-balance volume line, and what we see here is that on-balance volume has been rising as we get some higher closes from compared to the prior day. And the thing that we want to see here, though, is that the accumulation distribution is also rising in this period. That's because there's a bit of short covering. But this bar here at the end and this area here is what the telltale thing of what's going on. You start getting lower closes, and so on-balance volume starts dropping. And over here, you basically get a big gap down. And so the sellers, the buyers turning to sellers, they panic. Guess what? At the end of the day, accumulation distribution, because it's a higher close, goes up. This is the kind of setup that tells you that something may be pending. Certainly, at first glance, on balance volume is very negative, but then you have the accumulation distribution. And so you had some panic selling and you had some short covering. So this is what tells you that something is going to happen next. And what happens in the next few days from here is what's really important. Now, the final indicator is the volume by price bar. And of course, these are these big bars over here at the left side of the chart. This is, again, a look at the SPDR S&P 500 ETF SPY, and it's an intraday chart from ACP, which I like to use when I really want to home in on what's happening on an intraday basis, and it kind of gives me a good focal point of what's happening in an instant. But the key here is volume by price bars. The bigger the bars are, the more important that price level is, and thus the more important is what happens when the prices break out or break down after a congestion pattern. Okay, and so as you can see here, you have this consolidation going on, and then you have a nice breakout. That's important when you see that breakout above these big bars. That tells you that the buyers are in control. By the same token, you see these bars up here, and there's a lot of congestion there. And what happens here is it stalls. And when the price stalls at big volume by price bars, you have to start looking to see what's going to happen next. Okay. Now, why are these volume by price bars further important? Because the algorithms, especially the market maker robots, home in on these prices. And remember, they see the order flow before anyone else does. So they start making their bets based on the order flow. So when you see prices break out at a cluster of VBP bars, that means the algos are buying. And when you see prices stall at the VBP bars, that tells you that the algos are starting to notice a change in the order flow, and they're starting to hedge their bets, or maybe buy some puts, or start selling some stock index futures. So those are your three indicators that tell you when a short squeeze may be developing, and essentially about money flow. Now let's put it all together. This is a stock that I recommended recently in my new active trader service, which I will tell you about here at the end. It's a chart of Cenovus Energy. It's a Canadian oil company, and this is a telltale classic presentation of a short squeeze. This is over here is what I call the battle zone, and of course you see these big volume by price bars, and you see this nice breakout above the volume by price bars and the 200-day moving average. And so you have a nice rally here way back in July of 2023. But what you see here is that there are buyers. On balance volume is rising nicely, and that gets that price going up. But you don't see that there's a whole lot of short covering. In fact, every time there's a little bit of a dip, the short sellers come back in. Okay. And so eventually you knew that since on-balance volume was starting to top out here, you see a double top here, the short sellers would take over, and exactly what happens. And of course, there was a failure here at the volume by price bar, and the stock cratered lower. Now it gets interesting for what we're trying to do here. Start looking at the accumulation distribution line, and you see that there's a bit of short covering here after this bottom in early 2024. But you see that the short sellers came back in right here at this consolidation pattern. But the unbalanced volume indicator kept going up. So what that tells us that the short sellers and the real buyers are now having a significant battle in this battle zone here. And it tells us that the opportunity for short squeeze is developing. Rising on balance volume, falling accumulation distribution line. Buyers coming in as short sellers pile on. Somebody's got to win. And so you watch what happens, and that's what I call the sweet spot. And what happened here was that the buyers won and the stock went up. And that is what you want to see. So the classic short squeeze develops when, number one, there's a consolidation pattern. And you look at that volume by price bar. Now, if that volume by price bar is at the 200-day moving average, that's even better, because that gives you two major indicators that are telling you that there's activity at that price point, and that what happens there, a breakout or a breakdown, is going to be hugely important. You check out that accumulation distribution, which is falling. That tells you the short sellers are trying to pound the stock down, but hey, the buyers are actually beating them back. And there you go. So this is a classic short squeeze example. And then, of course, you see that the short sellers just continue to bail out, and the buyers continue to move in, and you have a nice breakout. So to recap, you want to screen for those oversold stocks in oversold sectors. You want to use these three indicators to spot the short squeeze. You look for that sweet spot. Of course, falling ADI tells you the short sellers are trying to pound the stock down. Rising OBV, investors are bullish, money is coming in, they're going to try and beat back the short sellers, create a short squeeze. Volume by price bar, support, resistance, and that's where the algos are. And what happens there, breakout or breakdown, tells you that the market makers are in tune with the order flow and they're piling on too. So the bottom line is a falling ADI with a rising OBV in that congestion zone is a pending short squeeze. Well, that's all I have for today. Thank you very much for your attention. I'm Joe Duarte from JoeDuarte&TheMoneyOptions.com, author of the best-selling Options Trading for Dummies and the Everything Investing in Your 20s and 30s. Of course, if you like what you see here, try a free 2-week trial to my service. Of course, I have a Buy Me a Coffee page, and I started a new service there called a Sector Selector, which features ETF trades, and it's free if you're a member. And finally, I have just started a new service for active traders. It's called Joe Duarte's Smart Money Passport, and the website is smartmoneypassport.substack.com. Check it out. There are, of course, opportunities for free trials there as well. As always, remember, trading is uncertain. Be prepared.